Harman Technology is 4 years old. We're basically the phoenix from the ashes of the Ilford imaging company that went into receivership in 2004. 6 of us at that time decided there was still sufficient of a business in the monochrome world to put a business together, and we basically did a management buyout from the receivership. The company is very much a family business. We have a number of fathers, sons, mothers, wives, daughters, etc., the whole remit across the family tree working in the business, and that has been the case both pre and post receivership. When we acquired the business, none of us had actually worked at board level previously, and as a consequence we took a lot of advice both during and after the acquisition. One of the things that we had no knowledge of particularly in any great detail were things like pensions, key man insurance and shareholder protection, particularly the latter, which none of us had heard of, to be frank, before. So we took advice. The advisors came in and explained the reasons why we might be interested in such products. The two I talk about being key man insurance and shareholder protection. It was explained to us by our advisors that should one of us unfortunately suffer a fatality, then our spouse would require the money from the shares as quickly as possible. And that's obviously something that we, as fellow directors stroke shareholders, felt was also very necessary. The question therefore was very clearly put to us by our advisors: how would you raise that money? The share valuation that would come due to your trading history in the first period would probably preclude you from getting it from cash flow. Therefore, this is why we have an insurance policy, a shareholder protection, and it offers you the ability to effectively take cover to pay out on that eventuality without causing distress to either yourselves, to the spouse and her family, and also to the employees of the company. Key man insurance, we felt, having listened, was probably not necessary for us, primarily because the makeup of the board is very much leans towards sales and marketing, and consequently if someone was to leave or be tragically killed, we felt there was sufficient expertise on the board to cover that eventuality in that area. Again, from an operational point of view, due to the fact that we have so many people long-standing within the company, people here have worked 20, 30, 40 years. Because of that expertise, we again felt that from an operational point of view, we'd be able to pull through the skills required if that was the area that we suddenly found we had a hole in. The process itself was fairly straightforward. The advisors filled out the trust forms for us. We had each have to take out our own trust, with the other directors, stroke shareholders, being joint trustees for everybody else's. So really it was a case of a large pile of papers needed filling out, which our advisors did for us, and then for us to sign. So it was a fairly painless task. The other aspect being the requirement to have a medical, obviously as with any insurance these days, especially for the sums insured. In terms of actual amount, it's no greater or less an evil than any other insurance. I'd rather not pay insurance, but it's there for a purpose. At the end of the day, we understand the reason we took out the policy. It's not huge amounts of money. It's very, as I say, it's very similar to taking out life cover on your mortgage. It's not a huge amount of money, but it delivers at the end of the day something that we believe the business needs for its ongoing protection. So in terms of quantity, it wasn't an issue to us.